All right, guys, we're going to do something a little different today. I'm going to give some setups, but I'm going to show you how I use the fibs. When I say fibs, I mean the Fibonacci retracement tool. How I use it may be different from some experts, but it works for me. So I've had a lot of people asking me how to use fibs, so I figured that we would go over that today. So before we do that, let me go ahead and give you all the setups. I'll put them in the chat. But if you have questions, feel free to ask. All right, make sure you all can see my screen. Let me move this. All right. Thank you, Mo. If you may not notice, but I am using the TradingView desktop version. I find that it's more convenient to use. I can keep it open and it doesn't give me that extra window in Chrome. So if you have not already and you use TradingView, download the desktop version. Something else that I found that makes trading simpler and more convenient, I now use Oanda as my Forex broker. You can't trade indices on Oanda, so I use Forex. Thanks to Monica and Mello on that recommendation. I use Forex to trade the indices. I use Oanda to trade the currencies. Why? Well, because Oanda integrates directly with TradingView. So if you look at my sell and buy, I can literally enter a trade while I'm marking up. So for those of you who may be new or you've been looking for a broker to use and you can use it, I recommend Oanda or Forex.com. Anything that integrates with TradingView, because when I give setups, for a lot of people, the discrepancy has always been the value or the number. And I always tell you, it's not so much about the value, it's about the zone. But now when I do setups and I give a particular number, I know that because I am using Oanda as my broker, whatever numbers appear on TradingView, those are the exact numbers. See? Oanda. And there's my Oanda Live right there. So with that being said, let's go ahead and get into these setups. I already marked up a few, so I'll just drop those in the chat and then I'll show you how I got them, why I got them, etc. Let me turn off some of my extra values. 618, all right. First one, let's start with the big dogs first. US 30. On US 30, this was actually the entry right here. So this is what I hope happens. Market has been closed. So as you know, it's still moving behind the scenes. So hopefully we'll get some pullback to this area. As you can see, this is a key level. Look at all of the activity right here. So hopefully we get some pullback to this area right in here. And then we get a further push up. That would be ideal for it to come here, or even better here, and then push up. That's what I hope happens. If not, it could even come back to where you see this red rectangle, this light rectangle, and then push up. So my anticipated targets, if it pushes up, are my Fibonacci levels, which again, you'll have a better understanding of Fibonacci levels after today. So these are my potential targets on a buy. If it breaks below this red line, this will be your sell zone right here. And then the targets would be Fibonacci levels. Immediate targets would be Fibonacci levels. This is on a 4-hour. It's already at the buy entry. And what I've been doing lately, my buy and sell areas are the same. So if it let's say the market is moving up, if it pushes through, then that's a buy area. If it rejects, that's a sell area. Does that make sense? Cool. Perfect. So this is US 30 on the 4-hour. Give a third target. And then I'll come back and go over these Fibonacci's. Copy this link, go to the chat. All right, Nas already marked up. Bring that here. This is a sell entry. These are targets. Again, if you have questions while we do this, please come on and ask. Wait, is that Nas or SPX? Yep, good. All right, SPX, same. We'll make that a sell entry now and a buy entry right here. Target. 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 So if you notice, my targets are fib levels. You can even turn on pivots. Pivots are right around the fib levels, but I don't want to confuse you too much. So today, because I'm doing some fib training, I'm using fib levels. Gold. Those dash lines, if you can see my dash lines, those are alerts. That's so I don't have to babysit the charts. Zone. Target. What I'm doing now is holding the command and it just copies the line. There we go. My gold I do a little different. Gold is in consolidation right now. So my buy and sell is outside of this consolidation area. So as you can see, it's ranging back and forth. And this is the 4 hour. If you go down, you may see opportunities for trades. I like trading gold on the 4 hour. Longer time frames are generally more accurate. I actually think gold is going to break down and fill up this wick. So that's what I'm hoping for. It doesn't matter to me what direction. People say, you know, they basically bet on one direction. I never do. That's why you always see me put two directions on my markups. I'm not trying to predict the market. I'm responding to what the market does. Silver, same. Silver is actually dropping out now. I'll do silver on the fib. I'll come mark that up with the fib. If you remember, I put this in the chat last week on this sale. Here we go. Let's go on the daily. So if GU breaks outside of this zone here, we can look for a big drop. But let's see what happens this week. See what happens this week. I'll come back to that one. Ethereum. Looking for Ethereum to come back. We'll see. Looking for Ethereum to come down here before making a push up and possibly back down. Or it can form a morning star here and shoot up. If it does, where's my fib? Here's the area of concern. For investing purposes, this is where I would be looking to buy it as an investment around these areas. In trading, let's see what happens around here and around here if it breaks out. But as an investment, because this is a discounted area in here. But you know, you could be buying weekly. I don't know what your investment goals are or procedures are, but for me, I'll be buying it again once it comes down here. But you can trade it wherever, obviously. So it's in the sale now. Let's see if it'll come down. All right. Let's get into some fib training now. Chi, the numbers may differ, but the zones are the same. So Bitstamp and Bitfinex may differ in their values, but the zones are still the same. That's why it's important to look at the zones and not so much the numbers. Does that make sense? So let's look at the two. Let's go to Bitcoin. Right now I'm on Bitfinex. The value on Bitfinex is around 48,350 to 48,360. Let's try another broker and see if it differs. BTC USD. Oh, it's giving me, let me uncheck Oanda. Let's look at Binance as an example. See, on Binance, it's around 48,980. So let's go back. See the difference? 48,385 on Bitfinex. On Binance, 48,990. So whatever you choose to use, just be consistent with that, because the numbers change either way. Yeah, cool. If you buy on Coinbase, it may be a good idea to use Coinbase. Let's go to Coinbase's number. So there's around 48,400. All right, let's get into fib training now. Let's look at Nas. And again, Nas is on Oanda because I trade Oanda. That's my broker. But watch this. Let me save this so I can just come back to it. All right, I am going to delete my fibs. In fact, I'm gonna delete all of the drawings. So how I do fibs? By fibs, Fibonacci. So it's the 1, 2, 3rd tool, and then it's the Fibonacci retracement tool. The way I do it, I go from swing low to swing high. Doc, what does that mean? All right, watch this. Let's say we start here. Let's say this is our high. All right, then we had the market from this point to swing lower. I'm not using this one because it went lower. So let's say we have a swing low here. My next swing high has to be higher than a previous high. So I wouldn't use this area because it's right around the same, it's actually lower than here. Is that making sense so far before I show another swing high? Let me know in the chat if that makes sense. Cool, cool. All right. So we're doing swing lows to swing highs. We had a swing high, then we swung lower. So my next swing high has to be higher than the previous high. So now the market pushes up, it breaks this high, see, and it forms another high right here. formed another high. Let me take this back here. All right. Make sure I'm getting the chat. Cool. Cool. We're tracking so far. It's still pushing up. Push, push, push. The next swing is here. You could say this low, but it came lower than this low. So I'll say my next swing is right in here. That's my swing low. So I'll take this. There's my swing low. This was the last swing low in this run. Does that make sense? I can't use this because we formed a peak higher than this peak. So this swing low is no longer significant. I come up to this high. We could use this low, but we broke that. So this is my recent swing low. Is everybody tracking so far? So let's get rid of the previous swings. They're no longer significant for what I am about to use the fibs for. This is my current swing low right here. So I'll label this current swing low. Right here. Now I'm looking at the current or most recent swing high. From this area, the most recent swing high is here. So I'll take my trend. Here's my swing high. Let me know if this makes sense so far. And let me know in the chat if this is making sense so I can show you how we use the fib. All right. Aloha, Emily. Watch this. Now that we have a swing low and a swing high, I am going to take my fibs and draw it using the lines that we made. Watch this. Let me wait before I do it. I like to go wick to wick. Some people go body to body. I like to go wick to wick. If you go from one wick, you have to go to another wick. If you go from one body, you have to go to another body. Just be consistent. It's not an exact science, but be as consistent as possible. All right. Watch this. Now I'm taking my fib. Because I'm going from a low to a high, I am swinging literally from this line to this line. Yes, but the other swing high has another swing high just below. You just answered your question. The swing high is below. If it's below, it's not a swing high. Does that make sense, Mrs. Jones? Perfect. I'm glad you asked that too, because I'm sure a lot of people had that question. Again, this is not an exact science, but you're looking for peaks in the move. Some people say, well, here's a swing high. Yes, it is, but it's not as high as this one. So I go to the highest current swing. Does that make sense? Cool. So there's my fibs. Watch this. So the market moved from this peak here, from this valley or low to this high. Now, if you want to have less risk in your trading, watch this. It is said that the market or the area of demand is between, and people differ, but generally most people agree on this. It's between the 50% as far as the 75%. But in most cases, the sweet spot to take a retracement is 50 to 61.8%. Ladies and gentlemen, 50 is the 0.5, 61.8 is the 0.618. So what I do, if you remember, I had this marked out. There's my zone. It's not exact. It's around in the area. Look at what the market did. It swung up to this high and swung down all the way to 61.8 on the dot. Ladies and gentlemen, that's where I entered that trade. Not because it came to the 61.8, but because it formed what is almost a morning star. If you've been on any of my trainings, you know how much I like morning and evening stars. It also formed what I like to call tweezers. So here are my rules and confirmations. Did the market come to a key level? Yes. Key level meaning there was a lot of activity around the same area. Number two, did it come to an area on the fibs that is known for retracement and entry zones? Yes, it came to the 618. My third confirmation, it formed my tweezers. By tweezers, I mean my two wicks. Ladies and gentlemen, when you have your confirmations, don't get emotionally attached. Take the trade. Take the trade. Here's the swing from 1 to 0 or 0 to 1, however you draw it. It came all the way back to the 618. Enter the trade. You can put your stop loss at the 0.75. Look at the move it made. Even if you take it here, not even at the wick, from 618. If you would have gotten out at the 25%, that's 270 points on NAS. If you're on the traditional broker, that's $271, give or take. Y'all see how that works? It's not just NAS. Watch this. We're going to go through the same thing on SPX. Let's delete everything. All right. So let's say the market is here. The market swung to here. Then it made a swing low right here. Can everybody agree that this is a swing low after a swing high? We can't use this one because the market went above that and then the low came below that. Does that make sense? Let me know if that's making sense in the chat. I want to make sure everybody is on the same page before I go. Cool. Perfect. All right. So we all agree from here to here's a swing. It made a new swing low here. So I'll mark this as a swing low. Watch the move. The market came here. This could have been a swing, but it kept going higher. Make sense? So here's our swing high here, right here. I am going to take the fibs, and if you want my fib levels, I'll be glad to give them to you. I didn't make them up. I just marked more than what are on most traditional or common fibs, or whatever you want to say. So I just select my fib level. I take it from the line to the line, and I stretch it across. Watch. So the market came up to 0. Remember the levels that I told you. I told you that traditionally the pullback is between 50% to 75%. The sweet spot for most people is the 61.8. Well, the market didn't come back to 61.8. It came back to 50%, almost to the T, right along the trend line. That's something else you can use as confirmation. It rejected along the trend line, and it formed a morning star. Look at that. That's a morning star. So I have several confirmations for me to take this trade. Here's my entry. Watch this. In this case, because 0.5 was its area to take off, the 0.618 will become my stop loss. The entry is the 50%. This will be my entry on the buy. You can target the fib levels on the way up. Is that making sense so far? Let me know if that's making sense in the chat. People say, Doc, your targets are so exact. Yeah, I know. It's not because I'm that good. It's because most people who know how to trade use these tools. So you have technical analysis, which is the markups, which is what we're doing now. You have fundamental analysis, which is the world events or the news. But then you have psychological analysis, which is where you account for most retail traders. This is the psychological and the technical aspect. Ms. Jones, I'll get to that. I appreciate that question. I don't trade much fundamental analysis because if the markets make a move based on the news, it doesn't matter what the news says. All I have to do is see what moves that the market is making. And then I adjust accordingly. So in this case, I see that price did not want to break below the 50%. So I just entered at the 50%. Watch this. Target 1, fib level, 38.2. Hit. Target 2, 25%. Hit. Look at this. Now, on my fib, I have quarter marks. So I can target on the way to the fib levels. Oh, no, it didn't delete them when I saved. It's cool. I know what they are. I know what they are. 0.78. Oh, here it is. 0.125. Look at this. It's on the way to the next fib level. Right here. So it takes some of the guesswork out when you have these benchmarks and these confirmations that you look for. If I set my entry at the 618, you would have gone into drawdown. Well, that's a good question, but I wouldn't have set my entry at the 618. I don't do limits on indices. I do market executions. So I wouldn't have had an entry at the 618 because price didn't come down that far. Does that make sense? And if I had a buy limit on the 618, it would have never triggered. So that's also the difference. But that's how I use the fibs. It's not rocket science, and once you understand it, it starts to make sense. Let's do another one. I told you I would do the markup on Was it GU, I believe? Or was it something else? Let's mark USD JPY.
It was GU.
Okay, thank you. I didn't want to take this off, but it's all good. All right. I'll repeat them, Ms. Jones. Give me a second. All right. Let's look at GU. Now, even if you're unexperienced, you can see that we went from a high point to a low point, which means even if temporarily we're in what's called a downtrend, which means the market is bearish or going down. Yes, I'll look at GA. So we're in a downtrend. Using this, even if we go from here, here's a high point right in here. I could use this as a low and see if this came back and then retrace down. I could do that, but I'm looking for where price came to right now, which is right in here, or most recently. This is the lowest point most recently. Does that make sense? Before I continue, let me know if this makes sense. Okay, G Money said yes. Yep. Cool. What I'm going to do now is draw my fibs from top to bottom. If you remember on the indices, I went from bottom to top. Now I'm about to go from top to bottom. Whichever way you do it, always go left to right. So I'm going from this line. Notice my dashes are right on the line. And I'm going from top left to bottom right. I stop at 0. So where I start is 1. Where I stop is 0. From 1 to 0. Now, market came all the way down. You can't make this stuff up, family. Look at this. Here's the swing to here. Put in the chat, what did I say was the area of sweet spot when you're looking for retracements? Before I do this, what values did I say? Let me see if we're paying attention. Exactly. I said from 50% as much as 75%, but the sweet spot for most people is the 61.8. So great job, everybody. Can't make this stuff up. Look at where price came back to. This is where price came back to. Look at that. 61.8. Ladies and gentlemen, when you see that, more times than not, you can take that trade. I don't care what you do. You're not going to win every trade. But when you have these conditions, you can be consistent with your results. And when you trade properly, you only need to win 2 or 3 times out of every trade. If you're trading properly, your trades could hit your stop loss 7 out of 10 times, and you would still be in profit. I want y'all to understand that. If you're trading properly, you could lose 7 out of 10 trades and still be in profit. GU came all the way back to the 618. If you'd have taken a trade just based off that, you would be up right now 388 pips. Just by using the Fibonacci. But it requires patience. See, when you use Fibonacci, you have to be patient because you're waiting for certain areas to get hit. No drawdown, G. Exactly. None. Put your stop loss at the previous fib and call it a day. Just like that. Entry, nowhere near your stop loss. It's pure profit. Look at that. Ladies and gentlemen, this does not have to be difficult. It does not have to be complicated. You got your head and shoulders and your harmonics and all of that. It's all Fibonacci. It's all Fibonacci. Every last bit of it, Fibonacci. But, you know, people want to put names on strategies and stuff so they can become an authority. That's all fine and good. But if you learn fundamentals, and of course, you don't have to trade just on Fibonacci. You still look for support and resistance, and this was an area of resistance. How do I know? Because price came down. It returned back to that trend line right along the 618. Came down again. Returned back to that trend line. 50%. Then it made its move. Came down. It retraced back where? 61.8. And then made its move. Now what you should be looking for I'm glad it's making sense. Now what you should be looking for, because it came down 100%, you're either looking for a breakout. You're looking for a breakout of this zone or a retracement. That's it. There's only two things it can do. It can either break out or retrace. If it breaks out, where's your target? Somebody tell me before I mark it. If it breaks out of this zone, where's the target? And don't worry about being incorrect. The next fib level, exactly. So our target on this breakout is the next fib level. So all I'll do is drop a line. There's the target. And that's a sell target because it's going down. Juanita, yes, that too. The longer term target is the next fib, but on my fibs, I use quarters. Mitzi, it's the next fib. My fib, I use quarters. So let me show you a standard fib. So let's delete all of this. Let's show you a standard fib. Just drawing one. You can double click the fib, go to template, and then you can go to the default fib. That's the default fibs right there. Yeah. I don't use this fib. The only thing that I keep from this fib is the 100%, the 0.5%, the 50%, the 61.8, and this doesn't even have it, the 38.2. The reason I use the 38.2 because that's the same as the 61.8. If you subtract 61.8 from 1, you get 38.2. If you subtract 38.2 from 1, you get 61.8. Makes sense to me because for, if you all don't know, I taught math for years, high school and college. So Fibonacci just makes sense to me. Marvin Gaye's iPhone, you can take that trade as often as you want, as long as you are within proper risk management for you. Question, with moving stop loss into profit, how soon would you move it, and what would be a good recommendation for trailing? Good question. To each his own, but I'll give you mine. If I am trading for 3%, if mine is in 1% in profit, I move my stop loss. Because I would rather have 1% than 0%. Does that make sense? If your take profit is 20 pips, I would say move it into profit after 10 to 15 pips. My take profits are usually 50 and above, though. If it's 20 pips, I'm just increasing my stop loss. To me, because I like trading on larger time frames, that's like scalping. And there's nothing wrong with scalping. I used to scalp, but I don't want to sit here and be on the charts all day. So let me show you my fibs, and then we get out of here. Appreciate you guys sticking around. I hope you got some value from today's call besides just markups. I hope you learned something about Fibonacci. All right, so let me apply mine. CC fib. So here are the major levels. I'll give you the major levels, and then we can go ahead and adjust them. So let me show you how to edit the levels. Let's say you're working from the default fibs. Let's apply the default fibs. All right, here are the default fibs. All right, this is how it looks by default. You can double click on the trend line, it'll open the values. And you can literally type your own values, but I uncheck everything above 1. And then I add quarters. So if you think about $1, you add quarters. So 1/4 of $1 is 25. So instead of 236, I'll do 0.25. It's about the same. So I have 0, 0.25, 0.5, think of money, 4 quarters. Instead of 786, I have 0.75. Then I have 1. 0.382 is already there. 0.618 is already there. Me personally, I add quarters of quarters, which means I'm splitting the quarters in halves. So I will add, just for me personally, 0.125. And then I will add 0.875. That's it. I also add extensions. So beyond 1 is 1.25, and less than 0 is negative 0.25. You can add those two. You just put negative 0.25, and then it'll give you that. Does that make sense? So that's how the fibs work. Anybody have any questions before we go? questions.
I'm sorry, typing will be too long for this question, but my stop loss, I always seem to be, I don't know if I'm just too close or having a too close or too tight stop loss. How do you get around like it going and hitting that stop loss as opposed to you're in profit, but it hits the stop loss? So what am I missing that I'm hitting that stop loss in time?
Well, it's not that you're missing anything. The banks understand the psychology of retail traders. So a lot of times the bank will look at the number of stop losses. And again, this may not be true. This is what I learned by learning. They say the banks manipulate, which I believe. They'll see the number of stop losses. Let me go back to the chart and see if I can make it make sense as I explain. All right. So let's say on this move down, let's say this is our entry right here. We enter here. Let's say you put the stop losses here. So I'll say this is the stop loss. All right. So what happens is we enter here, and most people trade on shorter time frames. So you enter here. Here's your entry. Was this where it was? Let me mark it. Where did I put that thing? All right, here we go. Let's say you enter here. You put your stop loss here. So your entry is literally right here. You see it's in profit. You haven't moved stop loss yet for whatever reason. And then banks will come back and take out all of this. And then it makes the move that you wanted. So what I do and what I tell people, the first move most of the times is not the real move. So let's clean this up. Let's say the entry is here. And this may not be a good example, but I'm going to do it anyway. Let's say your entry is here. It comes out. You want to wait for it to retest. So it makes this move. You want to wait for it to come back here. Then you enter. That's one way you can mitigate it. Another way, number one, I don't trade on the shorter time frames because I want to see the bigger picture. So I always look at the daily, because I want to see the bigger picture. So for me, taking this as an example, I look for these tweezers or these pairs. There's one. There's one. Here's the most recent right here. So even without fibs, I trade breakouts. So I would wait for price to break below. And when I say break, it has to close below this line. So if you notice, I was on the daily. So I drop down to the 4 hour, then I make adjustments. Right here. I need for price to close below this line for me to sell. Meaning I need a full candle body like this before another one forms. So if it closes here, and then I see this one, I'm in on the next candle for a sale. On a buy, same thing. This is a level of support. So being that this is a level of support, I would be looking for rejection. Meaning price comes to this area and reacts at this point as it did. So for teacup traders and head and shoulder traders, they put in limits around this area. So this would be a buy limit. Meaning when price hits this area, the trade automatically activates. And they set a particular take profit point so they can get in that trade. I like to trade at least 1 to 3. This would have been a 1 to 6 or 7 on a buy limit. So stop losses, I like to put stop losses as tight as possible. Meaning, even if I'm taken out and the trade still goes my direction, I'll get back in the trade because I'm still within risk management because my stop losses are so tight. I hope that helps a little bit.
It did. It makes sense. Thanks.
You're welcome. All right, y'all, 3 o'clock. So hope you learned something. I'll put a link to the recording so you can go back and study it. With that being said, hope you all have an amazing day. Make sure you're on the call tonight with Mr. Owens and Mr. Emanitier. And I will see you guys during the week. Appreciate y'all.